few options, choose the one that best fits your style. Option 1, concise and direct. Hey everyone, and welcome back to Forex Scope. Today, we're diving deep into the Australian dollar to Japanese yen pair, analyzing both the 15-minute and 1-minute charts to uncover potential trading opportunities. If you're serious about staying ahead in the Forex market, make sure you hit that subscribe button and the notification bell so you don't miss out on our insights. Let's get started. Option 2, friendly and engaging. What's up, Forex Scope community? Glad to have you tuning in again. We've got a fresh analysis lined up for you today. We're breaking down the Australian dollar to Japanese yen. We'll be looking at the 15-minute and 1-minute timeframes to give you a clear picture of where this pair might be headed. If you're looking for actionable Forex insights, consider subscribing. It's free, and it helps us bring you more content like this. Alright, let's jump into the charts. Option 3, slightly more enthusiastic. Hello and welcome back to Forex Scope, your go-to source for Forex analysis. Today's focus is on the exciting Australian dollar to Japanese yen pair, and we're going to be dissecting it on both the 15-minute and 1-minute charts to find those crucial intraday moves. Don't forget to subscribe to Forex Scope and turn on notifications to catch all our latest trade setups and trend predictions. Ready to see what the Australian dollar to Japanese yen has in store? Let's go! Option 4, focus on value. Welcome, traders, to another Forex Scope session. Today, we're bringing you a detailed look at the Australian dollar to Japanese yen, exploring its potential movements across the 15-minute and 1-minute timeframes. We aim to equip you with the knowledge to make informed decisions. If you value our in-depth analysis and timely signals, please subscribe to our channel and join our growing community. Let's get straight to the analysis. The resistance zone is identified between the timestamps 176-244-7500 and 176-245-4700, with a price range from 99.751 down to 99.589. This area exhibits a significant price reversal where the asset struggled to break above the upper bound multiple times, indicating strong selling pressure. Several candles within this timeframe show relatively large bodies and upper wicks, suggesting that attempts to push prices higher were met with immediate resistance and downward price action. The price then experienced a notable decline from this zone, reinforcing its significance as a barrier to upward movement. The density of trading activity and the repeated rejections observed in this price vicinity, characterized by the upper shadow of candles failing to close significantly above this level, highlight its role as a strong resistance. The asset repeatedly tested this ceiling, demonstrating a clear inability to sustain higher prices within this specified period, leading to subsequent downward price movements. This zone acted as a ceiling, preventing further upward progress and marking a period of potential overvaluation or a reversal point. The support zone is identified between the timestamps 176-245-2000 and 176-246-9100, with a price range from 99.296 down to 98.817. This area represents a significant demand zone where the price found strong buying interest and bounced back multiple times. We observed several candles within this period that formed lower shadows, indicating that prices attempted to fall further but were met with buying pressure pushing them back up. The asset's price consolidated and bounced off this level on several occasions, showing a clear floor below which sellers struggled to push the price. The repeated testing and rejection of lower prices within this zone confirm its role as a robust support. The presence of buying orders accumulating in this price range prevented further downside movement, acting as a crucial level where the asset found equilibrium before attempting further price discovery. This demonstrates a period of accumulation where buyers stepped in to defend this price level. This support zone is identified based on a clear accumulation and consolidation phase within the provided 1-minute candlestick data for AUDJPY. Specifically, the price action between timestamp 176-254-6020 and 176-254-6080 shows a period where the market struggled to move decisively lower. The lower bound of this support is observed at approximately 99.589, marked by the low of the candlestick at 176-254-6020 and the low of the candlestick at 176-254-6080 reaching 99.606. The upper bound of this support is identified around 99.618, corresponding to the high of the candlestick at 176-254-6080. This region exhibits multiple touches and a period of sideways trading, indicating significant buying interest at these levels, which previously prevented further downward movement. The repeated interaction with this price area suggests that traders are likely to defend it, potentially leading to a bounce or consolidation. The Bollinger Bands at this time are widening slightly, with the middle band around 99.775, indicating some volatility, but the price action strongly suggests this area of 99.618 to 99.605 is a key level for potential buying. This resistance zone is identified by a significant cluster of candlesticks that formed a clear ceiling for the price action around the 99.719 to 99.738 levels. The high of the candlestick at 176.254.4520 reached 99.746, and the high of the candlestick at 176.254.4580 touched 99.724, with the low at 176.254.4580 being 99.705. This area experienced strong selling pressure, pushing the price back down on multiple occasions between timestamps 176.254.4520 and 176.254.4580. The proximity of these high points and the subsequent price rejections indicate that sellers were actively defending this zone, making it difficult for the price to ascend further. The Bollinger Bands at this time show the upper band around 99.534, suggesting that the price was pushing towards the upper boundary, but the clear bearish momentum around these highs signifies a significant resistance level. This zone represents a price area where supply overwhelmed demand, leading to a reversal in price direction. The AUDJPY 1-minute chart shows a fluctuating price action following the previously identified support at 99.618 and resistance at 99.719. The current price at 99.62 is sitting just above the support zone, and the recent candlestick data suggests a period of consolidation with minor upward and downward movements. The Fibonacci levels, with price 1 at 99.62 and price 2 at 99.697, indicate a potential slight upward bias in the short term, as price 1 price 2. However, the immediate price action is characterized by indecision, with candles frequently testing the upper and lower bounds of the Bollinger Bands without strong commitment. The volume is relatively low, suggesting a lack of conviction from market participants. We can anticipate a series of oscillations around the current price, with the potential to retest the identified support and resistance levels. The initial upward movement to 99.66 might be followed by a brief pullback to 99.63, reflecting the choppy nature of the market. A subsequent move towards 99.68 could occur, followed by another dip to 99.65, before a final push towards the resistance zone at 99.69, all within the context of continued consolidation and potential reversal. The market seems to be in a wait-and-see mode, with no clear directional bias yet established. The proximity to the support zone and the low volume suggest that any upward move might be met with caution and selling pressure as traders consider taking profits or re-establishing short positions. The overall sentiment remains neutral to slightly bullish due to the Fibonacci alignment, but the price action is too volatile for a strong conviction.